advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional. Hi there, welcome to this week's edition of MPC Markets Bulls versus Bears, episode 79. Bull run looking tired despite outstanding MAG7 earnings and no bonus points for guessing who wrote that title. Welcome, JT. How you doing, mate?
I'm good, and welcome to all the viewers and listeners out there. Been a busy week in the markets.
It has been extraordinarily busy. I possibly underestimated during earnings season just how much work the morning podcast is. One of them was about 22 minutes, but we had Fed meeting. Jerome Powell spoke as well, and we had Meta and Microsoft earnings, and then just Trump's usual. Nut job sort of stuff, and which he made a signing on copper, which sent copper down 20% in less than an hour. So, I sped through that. I must have sounded like I'd had about 85 coffees, and it was still 22 minutes long. So interesting times this week. But look, media-wise this week, I was on with Mark Morland, who's at Value 3, very US stock focused, and look, we get asked on the call a lot about the same stocks all the time. And I had a look at the list, and I knew Mark Morland would take the bait, and I just went, "Why don't we do more US stocks?" And and he predictably said, "Yes, Mark's right." So we ended up doing a hybrid show, which they've never done before. The first half was the ASX, and the second half was the US, and then stock of the day was Microsoft, which was convenient because I'd done so much prep for the podcast in the morning, and I didn't have to prepare too much. But yeah, so it was an interesting show, but two very different mindsets, I've got to say. Doing ASX stocks at the start, and then doing Google on semiconductors, Microsoft. Amos Sports, which is like a bit of an up-and-coming Lululemon.
Okay.
Well, not athletic wear though, but like premium Kathmandu, like $600 rain jackets. And on a similar trajectory to Lululemon, but possibly just a little bit overs at the moment. But yeah, and it was an interesting show, and you could definitely tell the enthusiasm from both Mark and I. Lifted in the back half of the show, and because he's saying, he was at previously Team Invest. He's saying that it wasn't on purpose, but progressively he's just tipped over 90% of his portfolio now in US stocks. So overall, but yeah.
It's a tale of two different markets, basically, and it just shows, like, when we're out there talking to people about ASX, everyone kind of falls asleep, but you tell them that, we did trade risks on NVIDIA, and their eyes light up. So, yeah, ASX needs to do something.
Yeah, and they need to attract those, they need to attract those up-and-coming IPOs and those companies. Like,
absolutely.
I mean, Atlassian's an Australian story, Canva's an Australian story, like, they need to be doing their job and getting those guys. We just can't be full of junior miners all the time and then just go to sleep for 3 years when the commodities has a snooze. So otherwise, and I think that mindless green robot that we've spoken about in the past is, I think that's just the active fund managers and mid and small cap fund managers just seem to have given up. So all that money's getting sucked into CBA and there's no flow anymore into into that part of the market. So unless it's someone trying to bully a stock with a short. So yeah, which is a bit of a shame because there's some great companies in Australia. But I mean, look, if it all goes on the blockchain, JT, it's like it won't matter what exchange you're on soon.
Exactly.
It'll all be one world. We'll be the united colours of Benetton.
Yeah, and it's interesting that because of the Genius Act in the US, that's actually more. It's probably accelerated that development. So I think we'll be seeing it probably sometime next year or even later on this year, some sort of iteration of that. So
yeah.
Interesting
I,
times ahead.
I do still have my reservations about it. I mean, it takes away the teeth from the regulator, the SEC,
Mhm.
because you can't be taken off, suspended by the exchange, and human beings, particularly human beings in the financial industry in the USA, not good when there's not rules generally.
Yeah, exactly right. And they're not good when there are rules as well. So,
Well,
which,
yeah. So it, yeah, it's letting a lunatic loose. In some occasions. But yeah, let's
yeah.
move to the stock highlights on the ASX.
Commonwealth Bank, first company to lay off some call center staff due to AI. It wasn't a massive cut. It was like 45, 46 staff. So, but I think that's a sign of things to come. ResMed came out with earnings, shot it out of the park. I mean, like they missed on a few numbers, but basically the stock's been bought and rallied hard after the open. And Woodside, so they now have control of Bass Strait. I believe they took over Exxon Mobil. Basically Woodside solidifying their sort of dominant footprint in the energy industry in Australia. So there you go. There's three big blue chips that are in the news this week, and all for different reasons.
Yeah, ResMed's listed on in the US as well, and on a pretty horrible day today. I think they released some. I haven't gone through the earnings as yet, but I mean they're up 3% in a day where it's struggle city out there at the moment, because I think there's a fair bit of risk off attitude, and fair enough, to be honest. I wrote in the morning report this morning is I look. If it was my money and what I'm recommending to clients, and I tend to recommend what I do with my money generally. I just don't see the upside in not taking risk off the table here. I think Trump is this deadline. Well, this deadline's probably about an hour or two away at the time of recording from rolling over midnight in the US, and I think there's going to be some pretty big threats coming from the big man this weekend. Because I think, if anything, just to get things moving, because he doesn't like being ignored. So
Fair enough.
so this is one that, speaking of flying by the seat of your pants sort of announcements. So that 50% copper tariff that I speculated, and many in the media now agree with me actually, that he made it up on the spot, but. And I did a bit of an explainer on this on what was it, Thursday morning. In fact, because everyone's really critical of Trump, but every now and then I'm not defending him necessarily. I think the way he goes about things ends up the message gets lost. But as you can see here on the left, the US is a net copper exporter. And essentially, like, copper supply is diminishing. I've been bullish copper forever. We have no other alternative. This thing will end up doubling sometime in the next decade, and I think it'll probably be when China lifts and AI data centers start competing for it. But in terms of the US, he watered down the policy to being more so finished products and refined products. Because the US copper companies just got lazy, gone and outsourced it, and then so they mine copper in the US, they ship it offshore to get refined or finished, and then they ship it back in, which and what this, if it really boils down to, is that they're trying to get the US copper miners to just refine and finish it at home, basically, and with the rapid expansion of these AI data centers and the eventual. The whole grid's going to be rewired for either nuclear or renewables or whatever at some stage in the future. There's diminishing copper supply. He's kind of handing the industry a gift, realistically, because he knows demand's coming. So I'm gonna. This is a bit weird. I defended Jim Cramer last week, and I'm going to defend Trump now. But yeah, I think it's actually good policy, just as per usual with Trump, just poorly delivered. But I think. Yeah, I think there's going to be a bunch of these sorts of things, but copper being down 21%, I think this is we'll
it's an
look back in
opportunity. Yeah.
we'll look back in 6 months' time and go that, because I don't think it'll trade. To be honest, I think this will be the low for many, many years. Once we get through all this uncertainty. So, because it's just, there is, every single thing is lining up, from a supply demand curve to mild, like it's either going to be the energy transition, China coming back, that's China's economy coming back and powering the AI data centers. I mean, God, if you got all three of them competing for that one resource and there's a supply gap, I mean, yeah, away she goes. So, so I just thought I'd run through that as part of it, because that's a big move. And as you'll get, when we get to commodities, the bar charts all skew if, because copper's down 24 or something for the week. So, yeah, but I just thought it was important to run through that and sort of give it a little bit of context and things like that. So it didn't help. US dollar has been fairly strong this week as well, back above 100 at one stage, which is never good for commodity prices. US stocks, 4 of the MAG7. Microsoft and Meta at the top for a reason. Microsoft's got its mojo back. Like, it's, if you look at it on the scheme of things, they had a serious swing at this AI thing earlier than everyone else, in much bigger bets than anyone else, and is just massively paid off. So, and in my mind, it sort of warranted a mental re-rate now. Like, I always thought of Microsoft as a bit more of the more boring of the MAG7. I think now it's much, it shifted up the list for me towards the growthy end now, because they've really locked in that first mover advantage. And
how so? Have they built out more data center space and things like that? Is that where you see the growth?
Essentially via, I mean, OpenAI or GPT, that's not the long-term plan. The deal they've done with them is if it ever gets to AGI, Microsoft's not allowed to use it. Microsoft doesn't do dumb deals like that. They've obviously just gone, Sam Altman, here's a little truck full of money. And they've got well over 80% now of the Fortune 500 companies in the US are all now entrenched in their Azure cloud services, but it just got everyone on the platform there first, and then and as we all know, with those big companies, once you're there, it becomes hard to move, right? So and Microsoft has done that time and time again. So they started out, I don't know, 25 years ago with a ham-fisted attempt at Clippy, the Microsoft assistant that everyone hated, and 25 years on, managed to finally get somewhere close to what they were intending. And we've got some flow diagrams of their, and Meta was outstanding as well. It was up 11 or 12% at one stage. Apple was just about iPhones. I mean, just disappointing, but I won't need to go on too much of a rant there. But and then Amazon beat expectations. They all beat expectations, by the way, on top and bottom line. But Amazon beat by a decent amount. Investors were a bit disappointed with AWS, and it drifted to be about down 1% initially in the aftermarket, and then finished down like nearly 8%. It was down 8% at one stage in the aftermarket. So, and it wasn't disappointing. I think that's just that's kind of what triggered the headline for today's for this week's podcast, was like, that price action's pretty dangerous. Moving on to the market map for the week. Either really green or really red.
Well, it's a tale of two markets at the moment. Like, basically, if you look under the hood, if you're not the MAG7, everything's kind of just rolling over at this stage. I do have a look at a lot more US charts these days, and basically the tech sector is doing really well, but a lot of the other sectors are starting to roll over. So interesting that the market map's kind of mixed for the week, and it'll be interesting to see what we come up with for this week's prediction, bullish or bearish. I remember you precast your vote, so we'll talk about that a bit later. But one thing I will say about the markets overall is that generally when we see some good news and the market doesn't actually punch onto new highs, that's a good sign that we might be hitting a bit of a top here. So yeah, and as you said, seasonally, August is kind of a weaker month. So we had that push for the end of the month yesterday. Especially we saw that in our markets, and it's a little bit weaker today. So yeah, I think that'll be the preview for which way we're both leaning coming up. But in terms of stocks that are so strong, Palantir, I believe it's still the most expensive company in the world, and it just keeps punching onto new highs. So and that's one of the alpha picks from good old Richard, and hats off to him.
Yeah, absolutely. And one really, I think it's a positive sign. They had quite a blunt bloke from the, I'm sure he would have been a general or something like that from the Department of Defence. And because he's not like a business guy, he just came out and said, we're seeking tenders for alternative to Palantir because we've become far too reliant on them. And I'm like, dude, don't say that. Like, you just admitted that. I'm pretty sure Palantir is going to be sitting there. There'd be someone sharpening their pencil to get the margins up for sure now. So,
yeah, exactly.
Keep your cards close to your chest, man. Yeah, he's probably not in charge of the stealth bombers. Just quietly, that bloke. He was from the Department of Defence. Big thing for me, and it was kind of lost in the end of the week's MAG7. Well, for those big earnings, was the Wednesday. So Wednesday morning, so Tuesday night their time, there was 10 companies reported earnings, or the top 10 companies that reported earnings, which were of decent sized market cap. The best result was Starbucks up 3 and a bit%. The rest of them were down anywhere from 2 to 30% on their earnings. So like the next 9. So the stats are not like 80% to beat on revenue and above 80% of companies beating on EPS is that's the bell curve. You've got to be better than 80%. Last week we were at 67 for revenue, but we were still above 80 for EPS. Those figures are worsened again this week. So, So there is still margins going okay. And US GDP was 3% this week, expected at 2.4. So rate cuts are just not coming there. And now Powell's dug his heels in as well.
Yeah.
So he's like, well, you can't fire me, and we're not moving rates. So you can do as many site visits to the Fed building as you want. So. But look, these are really handy things from. We don't do these, otherwise I'd be driven nuts by graphic design. But it's called how they make their money. But one of these things is obviously I'd made a comparison this morning, like Amazon, multiple revenue sources there. But if you have a look at their AWS is only about a third of their rev or less, but is more than half of their net profit or their operating profit. So these sort of ancillary services and advertising is like, it's not super low margin businesses, but that net profit's wafer thin. And I guess I have to admit, this is what people like about Apple. It's a pretty fat line over here, and cost of revenue and things would be going down. The big beautiful bill also opens up way more grants and stuff to these guys as well. So their R&D spend's just going to get super covered by the US government, and on top of the fact they don't pay tax anyway. But yeah, that's sort of. Interestingly, the Apple in earnings call, all they spoke about was iPhone. So they could have just played an old recording from 4 years ago today. Apparently they pretty much avoided the subject when it came to AI. They just said Apple Intelligence is coming. Apple Intelligence is coming. No one knows what Apple Intelligence is, or what it's. But yeah, anyway, like I said, that's a longer conversation because I'm I don't think Apple's going to fall over in anytime soon. But they completely shut down their own stores in China for the first time. They have no, those flagship stores. They've said no, we give up in China on those, which was a big sort of resignation, I think.
Really? Well, I thought Apple were extremely popular in China, but I guess not.
No, decreasingly so. But the thing about it is, though, all of this ecosystem on the services, which is a big chunk of their rev, if they don't sell iPhones, that goes down incrementally with, you're not in their ecosystem. You're not so any damage to the iPhone, which is the gateway drug for Apple, damages their services hard as well, which is by far their two biggest revenue lines. So I reckon, I'm a bit those Meta glasses. If that starts to replace phones, or people start to use those potentially, or there's some new device. If I knew what it was, I wouldn't be sitting here. I'd be making billions in Silicon Valley. But that iPhone becomes irrelevant. They're toast. I think it'll, and people are just. It's one of those moments in markets where no one worries about Apple until they worry. Like there's been stocks in history like that before. So, and as you can see here, we'll skip off Meta income statement as well. Really nice profit margins. That's probably those two on the left there. I like those flow charts. Big fat green net profits, and everything's increasing margins. Azure, the intelligent cloud, that's the first time they've ever done an earnings and given a number for that specific thing. So I would assume they're going to keep doing that. They're expecting 37. This is probably why they did it. It was already up 26% to 30 billion. They're expecting 37% growth next quarter. Ooh. So yeah. So yeah, that's why I was so impressed with Microsoft. I think with Meta, that I don't know, it probably was due a bit of a win, but but like I said, it's always been Captain Boring, and I'm just like, woo, it's like a middle-aged man getting a sports car almost,
Yeah. Well, the thing is, and you said this in the office, is that 37% growth. That's usually a startup. But we're talking about the most mature company and the biggest blue chip with that kind of growth. So yeah, I can see why you've changed your tune on Microsoft there.
Oh, I was always bullish Microsoft. But now in my head it's not a sort of a balanced or a conservative pick anymore. It's in my mind now it's a growth pick. But we're talking about it 10 bill in fresh business next quarter. Wow. But yes, moving on to commodities, where in copper probably 10 bill was lost in half an hour. But go ahead.
Yeah, so just in general, all the metals were weaker, and it's all on the back of a stronger US dollar. And then obviously Trump, flip-flopping on the tariffs. And obviously the big one there is copper, which is down 24% for the week so far. It dropped, and then it had another down night last night. But as you said, I think there will be bottom picking available soon. But I'll just let the technicals show me when that is. Lithium hit as well, and uranium. So yeah, not a great week for commodities in general. And I have noticed a lot of the gold stocks and gold miners, silver stocks and silver miners, all rolling over as well. So as I said, this is pretty much a reversal from the week before, where it was all very positive for commodities, and it's reversed very quickly. And gold, silver, and copper metals don't mean much this week.
No, and I think it's also a big flag, a risk-off flag.
Yeah.
Because those silver, copper, platinum, lithium, uranium in particular are much better. They perform much better in growth markets. So that was kind of a bit of a nail in the coffin for me, looking at what, not necessarily the copper part, but the silver, platinum, lithium, and uranium bit for me was what got me getting getting the bear suit back out from the dry cleaners. On top of the fact that I didn't particularly like the price action, but yeah. So despite that though, we trade of the week was one that was better on the call. I was a beneficiary of having to go and have a bit of a research into on semiconductor now, and I on the face of it, because it's kind of well, particularly with US stocks, it's different. I use a completely different set of metrics depending on what style of company, but this didn't seem that great to me, and I didn't really get it because I'd sort of put a lot more focus on Google and Amos Sports, and HIMS was another one that we've recommended here at MPC, and I did a bit of work on, but this one just sort of seemed, American Semiconductor, it can't be that good or whatever. And I sort of dug down and went, it's cheap, it looks pretty good. And one thing that didn't come up in the research was like the deals they've been doing with Tesla and Nvidia. So basically they're the power sensors in all of the Blackwell chips. And when you're paying 150K for a Blackwell chip or whatever it is, yeah, pesky little sensor. There's a footnote on the invoice, I would have thought. So they'll probably get good margin there. And they're all the cameras in all the Tesla cars, and there'll be all the sensors for the Tesla robots as well. So it's not necessarily a story about this company as, it's not their innovation that's going to drive these guys higher. It's other people's, but they're kind of a necessary tool. The picks and shovels, as you would say, JT.
Yeah, basically just look at who they're selling to. And so, yeah, if your customers are two of the best companies in the world, you must be a decent supplier. So, yeah, that's a great company there. Technically, it's kind of looks like it's rolled over, but the thing is, it's been in a nice long uptrend. So, yeah, we're recommending to buy that one and add it to the Alpha portfolio, the global Alpha portfolio.
Indeed, and it might be one that actually might make it into the high conviction. I've just got to do a little bit more work on it, etc. But I do like the fact they're a US manufacturer as well. So same as HIMS. This company kind of suits Trump's policy. With HIMS, it's the generic drugs and bringing down healthcare costs, and with these guys, it's so they don't have to be TSM. These guys, they're not. They're not trying to be, but I mean, Nvidia fell ass backwards into being the AI GPU thing. Like they were gaming. They made video cards for gaming, and then the Bitcoin miners worked out, these are pretty good, and then Jensen's awesome. He pivoted, and I'm not taking anything away from the company, but sometimes you just need a little bit of luck. Basically, is what I'm trying to say. And if you can capitalize on that luck, I mean, you can have an Nvidia.
Yeah, absolutely.
I'm not saying, by the way, I'm not categorically not saying this is Nvidia. I don't want any quotes out there out of context. It'll be a bit of a grinder, but I think it can benefit pretty well, because all of those sensors are really key for any automation. For a bunch of different things, and monitoring particularly, and I think it might even do heat monitoring for those in those data centers as well. So, that's a big how can I say it? That's a big tick. That's obviously a necessary component, because it's all about cooling with the data centers. So you need to monitor that temperature closely. Well, and it's all about not blowing up your 150 grand bloody Blackwell chip that if you're silly enough to blow it up, you've then got to wait 8 to 9 months to get a new one because there's a backlog. So like I said, it's one of those ones that I think will do pretty well. But look, nothing's immune to broader market weakness, but it'd be one that I'd probably dollar cost average personally. But it's just one that I really do like the idea of having a little bit on and maybe adding to it over time. Just before we get to fear and greed, JT, I forgot to put the calendar on for those of you who want. The calendar's available on the website, as it is every week.
Oh yeah. So what's the big ones coming up next week?
Well, Palantir on Monday.
Ooh.
Yeah, so but that's where future growth and reality might might meet. It depends on how good the CEO is at selling the future contracts. AMD is a fairly big one.
Or
Pfizer.
maybe he can just replay the that colonel from the from the army. That's your actual presentation.
Yeah, exactly. It's highly likely, but Pfizer, the healthcare sector got belted this week.
Hmm.
Thank God we didn't buy it. It looked like it had green shoots of recovering, and United Health had just a disaster again. They stopped giving guidance, then they reinstated guidance and missed by a mile. And they would have known what analysts were guiding. So they could have just said we're just gonna continue to not give guidance. Instead, they just gave a disastrous number. So that company's just in disarray at the moment. But so I don't not much hope for Pfizer. Judging on what the others have done. So Cat is on Tuesday as well. Caterpillar. That's I say the barometer of the economy. Sometimes
Yeah,
people say.
absolutely. I see AMD's on Tuesday as well. That chart has been on a tear. So, yeah, it'll be interesting to see if that gaps up again on Tuesday after earnings. Because I've seen that.
Yeah.
I've seen that quite a bit where stocks are running into earnings and then they shoot the lights out and then they keep going after a gap up, and you just don't see that in the Aussie markets as often. So when the market's hot,
As often as being generous.
yeah, exactly. But as we say, it's that mindless green robot. They just keep looking for the winners. So there's momentum trading in the States galore. Oh, and one thing I will say, it was in my traders chat, but basically Citadel, they have what they call a retail flow index, and it's actually just clocked over, I think, maybe something like 60 days in a row where it's like increasing retail flow, and it's a record on their system. That's a metric that they measure themselves, but it just shows retail money has bought the dip and they're still quite bullish this market. So interesting to see how they fare during August.
Well, yeah, I'm pretty sure internally they wouldn't call it retail flow. I'm not sure there'd be a nastier name for it in there. But that actually reminds me, I'm springing this on you, but those Trump accounts for where Trump's going to give away, it's sort of like a subsidy and like an investment account to every kid that's born, and you're not allowed to take any money out, but you can contribute. There's some conditions on it or whatever, but you can. And basically, it's a subsidy to a newborn baby. Not allowed to touch it till you retire. And I'm sure he's putting a load of conditions on it. And I think there's some favourable conditions if you want to deposit into it, or if you want to. Look, I was just flabbergasted that because again, I think this is actually pretty good policy. And probably, but the mindless green robot just got way bigger, because but they're talking about like low income earners or like people who would be classified as on the not poverty, but like not far above poverty, and it varies in definition around the world. But you should end up with about 700K by the time you retire, if you just leave it alone and let it go. It's been a pretty they did use the S&P numbers for the last like 30 years, which is like the best 30 years in history by a long way. So I don't I'm not, but they're politicians, don't get me wrong. And they're actually doing something that's actually pretty smart.
Well, the thing is, we did something similar here, but then we actually gave it to people and people use it to buy TVs. At least it's going to something an asset for your future. So not to say that TVs weren't great investments though.
Yes, no, there's plenty of them on Gumtree. But yeah, no. So that and look it probably that passive flow gives a fair bit of stability to markets as well. And And again, so that's like twice in one podcast. I'm going to say not a bad policy. I haven't gone into the fine print of it all, because it was on Bloomberg this morning. Particularly, they were talking about it, and I was a little bit in and out in terms of the details. And I swear I heard something about like there'd be a tax benefit for contributing on top of it.
Yep.
And things like that, which is also smart. But then obviously when it's in, you can't get it back out again as well.
Yeah,
So
yeah.
that'll give. I mean, that not being able to withdraw, no redemptions, that stabilises the stock market as well. And then I'm sure once they get people in, it'll be like, oh, we just decide that you have to buy treasuries with it now or something like that.
Exactly.
So
Exactly.
so
Oh,
it'll be a control.
Yeah, and just on that, China had something similar with their own babies. So they have actually got a baby bonus as well now. So remember they had the one-child policy. Now you're actually getting money from the government for having babies. I forget the actual amount, but have a look at A4N. I think it was on Tuesday. Not A4N, A2 Milk. So
A2 milk, yeah.
Yeah, so A2 Milk sells the baby formula, and the Chinese love that product, and basically it just shot up. It did shoot back as well, but yeah, interesting that the governments around the world want to, increase the population, and which is obviously our aging demographics is one of the worries of the future. So interesting, two different policies, but same effect.
Yeah, both really as dumb as each other, to be honest. But when your KPI metric is GDP, you incentive, like, it should be GDP per capita, not just GDP. And if it was GDP per capita, we wouldn't be in this problem in the first place. So in the US or Japan or anywhere, to be honest, if that was our metric that we held us, but it's just like growth at all costs. So we're not growing enough. Quick, have more kids. Like, it's just, anyway, again, rant alert, sorry. But no, we can now move on to fear and greed.
So I believe it was like 77 last week, or was it 76? It was just in the extreme greed and back to just normal greed now, 63. And most of the other metrics are pretty greedy as well. So put and call, greedy, the moving averages, all in the greed, the strength, all in the greed. So this market looks like it wants to go higher. So with that, Mark, what's your? I know you precast your vote, but I just want to make it official. What's your call for next week?
I'm going to give a bearish scale because I'm going to be bearish for about 2 months. So on a five, sort of a star system, I'm only a 1-star bear this week, because I think the little bit of damage that was done last night, and that could have been. Like, if Meta and Microsoft didn't rally last night, that thing was in trouble. Like, that could have been down 3%. So it sort of gave back quite a bit over the course of the week. And I just think that everyone's going to be risk off tonight, and they're worried about payrolls, and so we'll probably finish lower. And then Trump won't say. Everyone will be fearful that he's going to say something stupid. He'll either say so many things that are stupid that it'll become white noise, or everyone will be pleasantly surprised that he hasn't caused a war. And then we'll and I think next week's your last sucker rally, basically. But I still think it'll end up lower. It'll be more of a sidewaysy sort of market, and then I'll be warming up to a 5-star bear, but as the month goes on, I think the next 2 weeks will be a good opportunity to review your portfolio, maybe take some profits, trim some of the stuff that you're not sure on, or has had a good run or whatever, and start building that war chest just in case it drops. I'm not calling Armageddon, because that's a low percentage thing to call a drop like April, but God, it's good if you've got some cash on the sidelines, though.
Yeah, exactly.
Like, it's a great opportunity.
And the thing is, like, so just looking back at what happened in April, is that the markets were already rolling over and they were heading down before that April sort of fall. So it's not like I'm bearish for next week as well. but I think it's going to be like a rolling
Whoa.
top. Yeah. So I'm like you. I'm a one-star bear. I think we'll just start to see this market drift off 1 to 2%, put in a lower low, and then maybe accelerate a little bit later. But we shall see, because we've got Palantir. They'll probably shoot after you guys again after earnings. AMD doing well. So, but anyway, I'm bearish for next week. But like you, a one-star bear.
Yes, well, I mean, maybe we've just created a new metric there, but and earnings is kind of over now. Like it's so there was 4 of the MAG7, so next week's more like the Diet Coke of earnings, and then you don't have Nvidia for like 3 more weeks. So, and look, Nvidia's, I mean, it's just nothing's going to shock that basically. So, so yeah, I do tend to think that. Yeah, I'm having a think about it. You're exactly right. It was starting to roll over, and then it has gathered momentum. So, and look, and just I'll put my hand up for here's your. I think I'm going to pre-record this and just splice it in for next month. Haven't had a negative payroll since December 2020. Payrolls is out tonight. Expecting 106,000, which is actually on the low side. I think that's the lowest expectation I've seen for a while.
Okay.
Usually it's 120 plus, but yeah, it'll probably come out 150 as per usual, with 50,000 revised off the previous number. The labour market leading indicators have been weaker, but they've been weaker for 4 months, and it hasn't come through in the numbers. So I'm almost at the point of like giving up, because the correlations are just they've just completely broken. I'm now at the point where I'm just hoping, please don't it'll hurt the market really badly and cause a big panic if they've been screwing in those numbers and there's a big catch up. That's not good. That'll be Armageddon, because employment is, people have got jobs, they'll make do, but if there's fear. Like when employment starts to go, it goes very fast, and it snowballs sentiment negatively way harder than anything. Outside of a black swan event, to be honest. So exactly. I just hope he hasn't been paying rinky dinks with the numbers. That's all.
Well, the thing is, if they have been cooking the books and you're going to come out with the truth now, at least don't do it in one go.
I'm calling them spacing it out, like
spread it out. Yeah.
Yeah, don't do it down 400,000 seasonally adjusted, and then like, because that scares me. So if you get readings, just make sure you measured. I mean, look.
Make it a believable lie if you're going to do it.
Yes, exactly. And Trump had probably just add numbers in from 2023 or something like that. So yeah, but I think that pretty much wraps it up. It's been a super busy week, and surprisingly, we kind of haven't gone anywhere. A quick update on Clarity Pharmaceuticals. Yeah, so still at that high level of shorts. They did a $200 million cap raise at an 18% premium to the 3-week VWAP, and a 2.5% premium to the day's price. It's not a massive company that and it was just placed with a friendly institutional investor. You've been in equities longer than me, JT. How often does a institutional placement like that happen at a premium?
It does happen. So it does happen on occasion, but it just shows that basically they didn't have to offer a discount. So normally, when you offer shares to someone at a placement, you have to get a discount to get the money in. So yeah, you're right. It doesn't happen often, but it all went to a friendly, and they didn't even tap the market. Basically, it was just done over the weekend. And as you said, you couldn't short the Clarity on other platforms after that announcement.
Well, and a disclaimer here: someone on Twitter said that the ability to borrow to short, and I don't know who the person was. And it was a new person who commented on a thread. But they've now got 3.5 times more cash than they need to get to revenue. So there's basically that is genuinely the last cap raise. Before they won't need one again. and the short position's 32 million shares. Average daily volumes 2.7 million, so about 12 to 14 trading days. They would have to be the buy side of every single trade for half a month or more to get out.
Yeah.
So that, and look, it's green, and you can, and I've been watching, and look, an old day trader myself, like I've been watching the depth in this thing, and they every time they sucker someone in on the offer to follow them in, they scoop it up and then start buying. So I mean, they're doing a pretty good job getting out, but there's always this ginormous offer in behind the market, like 5 to 10% away, and whenever it gets anywhere near it, it's like we're off that. So
that's it. And as we've seen, like that's all algo, so it's not spoofing because the computer's doing it.
Correct. If the computer's doing it, it's not spoofing. But I can't say these guys getting. I mean, if this gets momentum or they get a margin call or whatever, I think broader market weakness is the only thing that can save those guys. I reckon they're going to drop over 100 million on this easy. But half of the short is like below $3.
Yeah, from the lows, like it's quite decent as well. So yeah,
it's not a junior mining punk. Like this company's got like exponential upside growth. Whoever the risk manager was that let someone short this stock this big, it should just be hung, drawn, and quartered. But I can't say that, like, if it got momentum, they're not getting out for any less damage than $6. I don't reckon.
Yeah.
Well, there's not enough volume. So yeah, but anyway, that's all. It just brings me back to my days of being a day trader. It excites me a little bit, makes me feel young again. But it's not investing, so just ignore me if you haven't already switched off at this point of the podcast. Look, everyone, have a great weekend. If you haven't already, have a look at the morning podcast if you want to get your updates that regularly. Pretty long ones this week, but it'll probably go back to being 5 to 6 minutes next week. And then the Global Alpha will start as Richard got back in the country overnight. So the Global Alpha podcast will restart again next week as well. But yeah, thank you very much, JT. And we could have a CEO podcast interview coming as well. We won't reveal who it is just yet, but we're in the midst of trying to organise a bit of a special episode for you guys. You say great, but mate, you're more mining experience than me, so you're likely to be running it. To be honest.
Well, I've actually sat in a lot of boardroom meetings when they do present. So there's always like a stock standard list of questions. So I'll just bring those back out and make it sound like I know what I'm talking about.
Brilliant, and I'll just sit next to you and smile and steal a few of your questions.
That's it.
Yeah, but it'd be exciting to and we might try and do a few more sort of special editions like that over the course of the next sort of 6 months or so. But yeah, look, have a great weekend, everyone. I hope you enjoyed listening. See you next week.
See yous. Bye.